Every now and then we get lucky, we pick a stock, it goes up, or we try to trade. Usually we give it back when we lose money on a stock. The general public is not good at picking stocks. Personally, I've won, but I've lost way more than I've won. I'm just going out as an individual investor and trying to pick something that I think is going to go up tomorrow. That's why they have fund managers. That's why they have people that do this and look at busy, complicated screens all day long. We don't have time for that. So what's the next best option we have as individual investors trying to build wealth and security for ourselves and our family? One way, and I talk about it a lot, is to invest in some form of an S&P 500 index fund. It's a broad range of stocks within the stock market that are used and selected, periodically changed from time to time, and it gives you a broad diversification of a huge swath of the market versus just one share of Google. And the facts don't lie. Since its inception, the S&P has generated 16.6% return for investors, while individual investors that are picking stocks left and right have been half that at about 8.7%. And between 2002 and 2021, kind of that slice of time, which includes a couple crashes, the crash in 08 and 09 and the crash during COVID in 2020 in the stock market, it's kind of an important period in financial history. The S&P index has generated 9.5% for investors, while the individual stock pick and poker have gotten about 3.5% return. So you could see why we should just sit on the sidelines, let everybody else do it. It might be fun to hear about a stock that's going up. Tesla's going to crush it. Invest in Tesla. I'm here to warn you, you will probably lose in the end. I highly recommend, and this is not financial advice, check with your lawyers, consultants, and all that. I am not a financial advisor. Just telling you for illustration purposes what I do, and I invest in an S&P 500 index, and that's it. And I leave it alone. Ditch the stock picking.